Well, hi, everybody. It's wonderful to be here. I'm here to talk about the great leap forward in Hong Kong in the digital area, particularly perhaps recently stablecoins and so on, quite groundbreaking, and also the number of virtual asset service providers who've been approved under the regulatory regime. Of course, everything's not perfect. I think there's some discussion about where we stand in Hong Kong as compared with Singapore. And of course, there's the amazing changes in the US, which I think are going to be quite world-leading in the digital community. So I'm sure we'll be talking about that this morning. So we have a wonderful panel, and I'd like to introduce our panelists. First, we have King Leung, who I think you heard from earlier. He has probably the most exciting role in Hong Kong government of heading the financial services and fintech at Invest Hong Kong. And he has a background both in the public and the private sectors. He's worked in startups as well as in institutions and in government. So that's quite an amazing amount of deep experience. And we have John Cahill, who's the operating officer of Galaxy Digital Asset, with over 2 decades of experience in financial markets, including 19 years at Goldman Sachs. And he has huge experience in the crypto markets, more the institutional side with Galaxy Digital, and a lot of perspective globally, particularly in relation to the US as well as Hong Kong. He's based in Hong Kong, but managing digital asset internationalization. And Helen Ye has a super interesting job. She's CEO of Qubit Underwriting, which has quite interesting and amazing perspectives on risk management and insurance in the digital asset space. You know, when people are taking digital assets seriously, it's when they start paying for insurance in that area. So I'm going to ask each of our panelists to give you a brief overview, 2 or 3 minutes, about their views on the Hong Kong market, and then we'll dive into questions. So, King, if you wouldn't mind starting with your quick overview of where you think Hong Kong is at on digital assets.
Thank you so much, Julia. Now, again, I think I recognize some of the familiar faces about an hour ago. I just won't repeat what I just said. I just want to highlight 2 observations. Now, number 1, again, as I just briefly mentioned, the financial center status have really attracted quite a lot of wealth managers, the new generation of digital family office. So people like that have been creating different products, such as like structured Bitcoin product, right? Not very complicated. It's just a way that for some high net worths, private investors to get access to the crypto space while having the downside protected and things like that. So we've been seeing quite a lot of innovation and adoption in that regard. Now, but then as this happens, you can imagine this is really attracting quite a lot of old money in the form of private investors in this space. And again, this is a good news because as these folks are now getting more comfortable investing into this new form or investment vehicle, then the other innovation can be packaged in a way to distribute to this group of folks. Now, one example that you might have seen in the public media is this, again, the EV charging station. It's actually from a mainland state-owned enterprise, the China Resources. They have a subsidiary in Hong Kong. They've been building up all kinds of EV charging stations across town. And a local SFC licensed asset manager decided to tokenize their assets so that they're able to distribute the income from the rents, right, so to speak, of the EV charging station back to the investors. Now, it's not very sexy, so to speak, but this is a way where this is not like the entirely crypto, so to speak, but at the same time, this is something that the TradFi, old money people can easily understand, and it sounds innovative. So this is a way where we are seeing the spectrum from moving the pure crypto native to now moving gradually over a TradFi world where the different products are being experimented to serve their needs. So this is the first major observation. The second thing I just briefly want to touch on is on the infrastructure, because there have been just so much activities, honestly, behind the scene. So there are different builders now gradually moving to have some presence in Hong Kong. Why? That's because across the border, there are a lot of highly capable mainland Chinese like blockchain developers at a reasonably good cost compared to international standards. And these guys are good. So now we are seeing people setting up in Hong Kong where the team actually spread out, let's say in different parts of China to build things. So this is also something that may not catch the international or the media attention, but this is happening as well.
Thank you very much, King. John, could we hear from you, please?
Yeah, sure. Look, Galaxy was set up back in 2018 out of a family office, and we've, kind of been in this business a long time as an investor, as an asset manager, as a builder, and we chose Hong Kong a long time ago, mostly because a lot of the landscape that was being built, exchanges and entrepreneurs were based in Hong Kong. That's kind of come and gone and ebbed and flowed over the years. But I think, with digital assets, the entire landscape globally changed when Bitcoin ETF adoption happened, a year ago, January, in the US. And that gave, digital assets a permanent place in the portfolio allocation conversation. And all we've seen since then is, I guess, huge growth of new money into the space, and now regulation. And, I would say Hong Kong has been deliberate, but very slow to create rules around the space. And there's always this kind of conundrum that regulators have to deal with around, do we wedge this new stuff into the existing framework, or do we write entirely new rules? Elizabeth was just on stage talking about same risks, same regulation. And so I think in a lot of ways, digital assets do fit in to a lot of the, the guardrails that exist for securities and for dealing and offering and things of that nature. But there are unique attributes and unique risks that exist for digital assets. And so it takes longer for regulators to get their heads around it. There's an education process. It's kind of incumbent on the industry to engage with regulators to help them understand, to identify the risk, to be intellectually honest about what that means and what it takes to get into what I would consider like real institutional money. And to me, that's endowments and pension funds and kind of permanent capital. And so, Hong Kong has put out this Aspire framework. It's really meant to show the results of that industry engagement and where the list of priorities are for the government and for the legislation to come through. And we're kind of early on that journey, but we're on that journey. And so for regulations to be effective, you need to enable innovation. You can't stifle innovation. You can't stifle liquidity. But you also need to create guardrails so it doesn't hurt, small investors ultimately. Regulators generally are okay for professional institutional investors to speculate, but they want to create an environment where it's safe for smaller investors. And the engagement in Hong Kong is extraordinarily good, and I think they've heard what we have to say, and now we're in implementation, phase. We just finished a consultation session for, VA dealing, which certainly impacts our business, and custody. And so once we get through consultation, we'll have legislation, and then we'll have laws on the back of that. That helps to attract more capital and more entrepreneurship to the city. As someone running an unregulated business today, it's a pretty good place to operate. We're doing it. We're not in the shadows. We're in front of regulators, and they're very welcoming of our perspective from the institutional, interested in getting regulated and creating KYC, AML standards that are global and high. But ultimately, I think the U.S. is going to drive a lot of the global approach to regulations. I don't think anybody wants to move a direction that's inconsistent with the biggest capital markets, and Hong Kong is very important as a wealth center and as a tier 1 jurisdiction for doing capital markets activity. And so I think we'll see a lot more of this unlock in the next 6 to 12 months.
Well, I hope that's right. That sounds very exciting. So, Helen, how do you see it from the insurance perspective? You see a lot of deals, right?
Well, we do. So I'll give you that. I'll give everyone a little bit of background about Qubit first, right? So Qubit is, we started actually in Hong Kong, and currently we have presence in both Hong Kong, Singapore, and Australia. Our underwriting authority actually expands beyond Asia Pacific, but we also actually service some of the Middle East markets. So we underwrite on behalf of Lloyd's of London, which is one of the longest standing insurance markets in the world and the strongest balance sheets. We also underwrite on behalf of some local and international insurance and reinsurance companies as well. So the reason I say this is because I find it very interesting from our perspective. Now, everyone here, sitting on here, you are an innovator, you are a builder. To some extent, we are the risk taker. So we are I hate to say this, but insurance oftentimes is the opposite of innovation. Because insurance, by the end of the day, the nature of our business is law of large numbers. So what does that mean? That means two things. What we want to see are scale and maturity. So when we say scale, that also means diversity. We want people to have a scale of operations, have a level of income to support them to pay for premium income. But that level of scale also means that at the industry level, we want more players to be in this market. We want the asset managers, we want the technology solution providers, we want the custodies, we want the wallets, we also want the traders, the exchanges, right? So that will build a healthy ecosystem. And if you look at, from our perspective, Julia just mentioned, over the past 12 months, we received probably around 500 submissions for insurance from all over Asia Pacific and the Middle East. So what do we see? We see, in other markets, in Singapore, for example, right? Hong Kong oftentimes view Singapore as a competitor. But we see a very diverse selection of risk actually from Singapore, and they encompass every aspect of digital assets. We also see that more often actually from Australia, but it is a standalone, quite large economy, so that's understandable. But in Hong Kong, what we do see is very sort of mono risk lines, right? We see people applying for license, and so therefore they have to ask for insurance. So therefore it is selected VASPs, and now increasingly people talking about stablecoins, for example, and people talking about custodies, for example. But that's very selective. It is not a very prosperity sort of ecosystem perspective. So that's when we talk about the scale. We also look at maturity. And so when we look at maturity, and it's very important because we look at the risk from a perspective of probability. We say, what is the probability of you triggering a claim and we having a loss? So what does that mean? We look at you, we look at the maturity levels of a company, of an industry. What is your understanding of risk? Oftentimes, we talk to a lot of custodies, right? And they say, we don't have any risk. We have technology that resolves all the risk. You are wrong. Your risk is people, and you have a single point of failure, and that's your people, and you need to insure your people. But that understanding sometimes is not there until you have had a fail. You have had a loss, which needs to be a very large loss, which insurance company, we insure traditional financial institutions, we insure technology companies. We have seen all kinds of failures, right? So people need to be confident about what they build, but they also need to have a very real sense of what could fail. And to some extent, I feel that is something at the moment Hong Kong is lacking. So comparing the scale and also the maturity of the Hong Kong, and so then we actually go to what we call regulation. So Hong Kong's regulation is there, which is good news, but it is sometimes not really there, which I think is the bad news. When I say sometimes it's not there, it's because at the moment, if we look at, we say it is clearly there's a licensing scheme, people go through this, it's probably just a VASPs, and then we also have stablecoins coming out. But oftentimes people ask a question of saying, do we really need so many exchanges? Do we really need so many stable coins? And that is the constant challenge. And that's why instead of focusing on specific operations, is there a broad framework for people to encouraging an ecosystem that goes back to scale? And that's what we really care about.
Thank you. Thanks. That's a really different perspective, isn't it, on the digital world? So, John, could I ask you to share with us where you think the US is going in terms of digital regulation, digital frameworks? Will stablecoins be a major use of trade finance over the next 3 years? And what do you think the lessons are for Hong Kong from that model?
The short answer is I think yes, stablecoins will have a major impact on how people, move value around. I also think the U.S. has adopted, and the SEC has adopted if full disclosure, then no risk of prosecution mindset, which is quite a 180 from where it was 12 months ago. And so you see it's a much more permissive landscape. So a lot of capital is going there, a lot of entrepreneurs are going there. But there are rules forthcoming. So we had the Stablecoin Act that happened a couple of months ago. There's a lot of projects that are getting built there. I think it was explicitly banned to have yield associated with the stablecoin issuance, but there are very easy ways to kind of get around that. And I do think what will happen is, quick adoption for, the projects that do get up and running. And I think we'll see that massive wave of new issuance of stablecoins. Just look at Circle's IPO and the astronomical run it had after it hit the market. It was the first time a lot of people on Wall Street ever heard of a stablecoin. We live in the digital assets universe. We talk about this stuff all day long. We think penetration is close to 80%, 90%. It's just not. And so, just by that one metric, I think people are very excited about stablecoins as kind of the one of the topics of du jour. And what'll happen is, I think it'll help with getting more people to do stuff on chain. And things will be integrated into your phone and your wallet, and it will be seamless, and people won't know that they're using blockchain. I see the stablecoin, rise and regulatory framework being a way to get people interacting with blockchain without really knowing or really caring that they're interacting on blockchain. There's one of the reasons I got into this business after being on, doing a Wall Street job for a long time was it seemed obvious that better software ultimately wins. It's the Mark Andreessen software eats the world story. And like blockchain rails and plumbing is better than Fedwire and the system that it's replacing. And so I think moving value around quickly, fully auditable and transparent, and cheaply is going to ultimately, win. And now that we have regulations and framework to operate in, it's going to happen more quickly. It'll take a while. I think the market will figure out what's a good and useful stablecoin. For all the talk and all the conferences and all the flash, crypto hasn't really created a ton of useful stuff. You have Bitcoin as its own thing, and I think payments is the very obvious and demonstrable use case, and not a ton of other things that have gotten real adoption and integration into people's lives. And now we're on the on-ramp for stablecoins, and I think that's going to unlock a lot of the other things that people work on, in the DeFi space, in the composability space, more contract stuff will come on chain. Very long-winded answer. Sorry for that, but look, that's stablecoins. We're going to get infrastructure bill around digital assets before the end of the year. There's some controversial stuff in there. President Trump being who he is, there'll be opposition to no matter what direction that goes. But more clarity, more direction, more definition will lead to a lot more investment, and I think that will trickle on and really multiply outside of the US once there's more visibility there.
King, could I ask you, please? It seems to me that there's a very much of a survival of the fittest kind of philosophy being adopted in the US, which seems quite different from Hong Kong. Because, for example, I think it's been reported widely that there's more than 70 applicants, not applicants, expressions of interest under the stablecoin ordinance, which came into effect at the beginning of August, but we're told that only a handful will be approved. Do you think this kind of approach is going to hold Hong Kong back?
Well, I think it's a philosophical question. Now, so let me explain what I mean by that. It really depends on what perspective you look at stablecoins. You look at it as a financial innovation, you want to see who make the better shuffle, so to speak. Then I think the US model is great, right? You just let tons of people applying to see who plays out. So this is one way. Now, another way to think about it is that this is just like getting, in the case of Hong Kong, getting a bank to print the bank notes, right? So in Hong Kong, we happen to have three, okay? Right, the BOC, Standard Chartered, and HSBC. Now, so if you think about stablecoin as money or currency, then you take the subject much more seriously. And on top of that, this is the thing about the use case, right? So I think in the Internet 1.0 era, the killer apps is emails, right? Now we're in the sort of Web 3.0. So far, the killer apps is in payments. Look at the amount of money that Tether is making, right? So far, this boring payments vehicle is the killer app. Now, and based on that, the use case is about cross-border payments. Just think about it, right? We are using, let's say, maybe like a offshore renminbi stablecoin or Hong Kong dollar stablecoin to facilitate cross-border trade. So let's say someone in Nigeria, someone in Peru, right? Someone in, God knows, right? Hungary, right? Now, so all these emerging markets. Now, put yourself in their shoes. If this stablecoin, even though this is regulated, got a license from HMA, in which case people in Nigeria, they may not even know who is HMA, to be honest. Now, okay, but they have to trust that stablecoin that it will not be defaulted. Just like you're trusting the sovereign printed money. Then that conversation becomes much more serious conversation. As a result, you're probably not going to get like a bunch of like 20-year-old, super smart, right, very innovative, so-called print money. Because again, it's not just Hong Kong. You have to get the rest of the world to trust that printed money, so to speak. So therefore, HMA takes this very seriously. As a result, now we don't know how many licenses they will give out, but as the CEO, Mr. Eddie Yu, said to the media, it will not be a lot. Because this is the attitude they're taking. This is a serious matter. We talk about the issuance of currency, which is sovereign.
I see. So would it be fair to say you're regarding it as quasi-sovereign currency, stable coins approved in Hong Kong?
It is, right? Because you have to, again, if this is just used in Hong Kong, it's one thing. Then if Hong Kong can be successful, this stable coin will be used globally in a lot of emerging markets. So people have to trust it. So this is a serious matter.
John, I can see you jumping up and down.
No, this is the point of the conversation where I like to say that Hong Kong dollar is a stable coin. Hong Kong dollar already is a stable coin for all intents and purposes, right? It's managed to a tight
Well, it's
tight
not a
trading range.
digital stable coin,
So
is
what?
it?
So what? Oh, look, I think if people trust Tether today. There's billions of dollars of cross-border transactions every single day being used to settle real trade finance activity all across Southeast Asia, into and out of China. It doesn't get as much recognition because it's kind of done outside of the system. I think one that has, explicit blessing, explicit audits, engenders more trust and should, in a world that's rational and sensible, should get more adoption. But I think we'll see this massive run of issuance of different stablecoins, and there will end up being very few in the end. Because at the end of the day, it's currency, and it's dollar currency. The stablecoin, evolution that we're talking about now is dollarization. right? If you're using Tether to settle accounts, you're dollarizing your activity. You know, if you're in a high inflation place and you want to store value and you don't want to speculate, so you don't want to buy Bitcoin or Ethereum or some speculative asset, you put your savings into stablecoin. People are doing this every day at a reasonably high scale, and I think we're going to see some kind of response, competitive product coming from China, who isn't really interested in being part of a purely dollarized world, and neither should any sovereign state that wants control of their monetary policy. So I don't. This is kind of the very early stages of how this plays out, but I think that's where things get very interesting. I think some emerging market currencies will just cease to be relevant and might not exist over the medium term.
So thank you, thanks. I think we could carry on this stablecoin debate for quite a while, couldn't we? So Helen, I wanted to ask you, in all your insurance proposals that you see, is there any related to mainland China? And I would also like you to perhaps comment on the amount of talent that was and probably still is in China 10 years ago in this space, which hasn't been unleashed to the extent it could have been.
You asked a very interesting question, actually, Julia. We all know that China had an absolute ban of crypto. Anything to do with crypto was banned since 2017. And to date, we still see actually quite a lot of submissions from China. And of course, it's mostly relating into technology, right? So they're still building the technology. The majority of the applications that we receive from Singapore, from Hong Kong, they still maintain their tech team actually in China, mostly cross-border actually from Shenzhen, right? So the talents are still there, and I think they are still providing a lot of technical services to the companies cross-border to Shenzhen and also to Hong Kong and also to Singapore. But there's still, and thanks to Donald Trump, of course, I see another surge of mining activities. And that is still, we see a lot of activities relating to China. You can't say they're coming out of China, but they're still relating to China. So that's, at the moment, is the ties to China. There's a lot of discussions, when it comes to stablecoins, the RMB and how that is actually going to pan out, and what China is going to do, especially when Hong Kong issued the stablecoin legislation. There's a lot of speculation in terms of what the central government intends to do, what the People's Bank of China is going to do. But I agree with, I think Ken did a very good job. You started your comments by saying it is a philosophical discussion, whether it is you're printing the money or you are providing a payment service, right? Now, again, right, we have seen stablecoin submissions from Australia, from Middle East, and also here in Hong Kong. And when people describe what they do have quite different perspectives. And a lot of it is relating to facilitating payments instead of they're thinking that we are going to issue a currency. And from my perspective, I do agree. I think Hong Kong, the regulator, what I cannot actually agree with you very much is when you say, Hong Kong MA needs to make sure when the stable coins are issued, the people can trust it. I don't think it is regulators' job to take that on themselves, right? There's a technology layer to it, and what you can actually regulate is to say, do you have enough of reserve, and how do you reserve? How do you use that reserve? And leave the rest to the market, right? It is very similar to when insurance authorities, regulate insurance companies. You cannot say that when you actually issue an insurance policy, people need to trust your insurance policy. That is for the market to trust. But the insurance authority should regulate on us to say how much risk capital you must have and in what format, and then have the independent third-party market rating agencies to come in and rate you, and that is called the market. I think that's actually what probably will provide a wider perspective to help facilitate the technology development in Hong Kong and to use all that talent back in China. That is the reserve of Hong Kong, that no one else has that competitive advantage.
Thanks, Helen. Thank you. Can I just ask you, what percentage of the proposals you see are Hong Kong related? That's one question. And the other is, how do you assess country risk? Which is your highest risk country of the countries you look at?
We receive, at the moment, our portfolio consists probably around only 20% of business from Hong Kong. And the majority and the fastest growing business is in Australia. And then we also have a very healthy and stable, but still growing business in Singapore. We received at least hundreds of submissions, and still on a daily basis, we receive submissions from Middle East. The reason we receive from Middle East are the companies somehow related back to Asia Pacific. So these are the people, they thinking the regulatory framework is too slow here, they just decided they need to go back there. But the business model and what they want to do and their customers per se are still actually very much in the Asia Pacific region. So when we look at the country risk, we look at two things, right? The country per se, the sovereign risk, and that is very well rated. We look at all the S&P and AM Best and all the rating agencies. But we also look at the maturity of the regulations. We look at the regulators' intent, and I think that's very important. So back in 2021, for example, 2022, to be more specific, after the FTX blow up, we started to see a lot of regulators becoming less friendly or less permissive. So at the end of 2022, we saw this sweeping so-called inquiries into the industry in Australia, for example. And it is very important for the insurance companies. What people don't recognize is when this happens, it is the insurance company, well, if you buy insurance, it is the insurance companies who pick up all the bills, right? Any inquiry from the regulator, any investigation from the regulator triggers your insurance policies. So we pay a lot of attention to what kind of investigations that the regulators do, why they're doing this. It is systematic, or is it just a specific industry case? We then started to see a lot of, of course, we all know that MAS also had a shift in their attitude and how they regulate it. So Hong Kong, compared to other jurisdictions, right, it has some specific characteristics. One is, I think the regulatory intent is, from our perspective, it's sort of very specific, but not very clear. So when we say it's very specific, it has a specific regulation on VASP, for example, if you want to have an exchange here. And also, we know that stablecoins are coming out. But we don't have the regulators coming out talking about how to, drive the ecosystem, how to actually, to encourage the development or adoption of the technology. And I think that will be for the better, for the better of the Hong Kong and for all the builders here in Hong Kong to see how they can actually contribute and survive and build a business here in Hong Kong. The other thing about Hong Kong is it is sort of fast and slow, and it's also very interesting. So when I say it's fast, stablecoin, for example, has been quite fast, and I think everyone was quite happy about it. But if you think about how long it has taken VASP, the regulation, to come out, right? And so that actually took a long time. A lot of times people have this speculation, right, of who actually is driving the legislation, agenda in Hong Kong, and does this actually have anything? Is there any uncertainty that Hong Kong is connected to mainland China? We still have a lot of that kind of speculations in the market, right? And one thing to do that obviously is if there is some agreement actually with using the technology talents and also the expertise in China to benefit the industry here. And if that is still in the open and can be shared and can be, in some framework, then that will definitely benefit the industry and benefit us as well.
Thank you. Thanks. So King, tell us, who is driving the policy here?
Well, let me use a very specific example in which actually John's firm is part of, and that is the Web3 roadmap, right, the blueprints. And I would like to use this very concrete example to illustrate how things worked. Now, of course, we are living in an era of information explosion. So even for ourselves, I cannot possibly know of everything. So let alone, like Helen, you have a full-time job. So for certain things you may not be fully aware of, it's very understandable. Now, for this example about blueprints, this works as follows. Now, obviously, the organization is a very well respected organization, the Web3 Harbor. So the leaders are many of the leading players in the digital asset space. So they represent like digital ID, they represent the asset management, they represent the license, VASP, and so on. So they have all these leading players on the board. So it's a very well-represented organization. Now, so they have been talking about writing these blueprints for some time. We'll say like a year, at least like a year, right? Right, so now, but all along, so the leading team of Web3 Harbor have close conversation with Invest Hong Kong. And then also have close conversation with another Hong Kong agency called FSDC, the Financial Services Development Council. And that is essentially the finance-related policy think tank / research organization. Now, for those of you who are not familiar with FSDC, they're practically the single organization that writes up a lot of recommendation to the Policy Bureau, FSDB. And based on historical records, the recommendation in the form of policy papers were approved over 70% in the existence of this organization. So the hit rate is very high. Now, but then when they write this paper, it's not written by the civil servants. It's actually written in conjunction with the industry leaders. Okay, so this is exactly what's happening. With the help of Web3 Harbor, the paper has been sort of communicated very well with FSDC. FSDC also sort of like synthesize and digest and whatnot, and then they will have their own version, maybe like a concise version of it, and then they propose it to FSDB for consideration. And the hit rate is like 70%. Now, and when this goes out to become law, then the regulators, the SFC, HMA, they are the enforcement party, and people like Invest Hong Kong, we are responsible to make sure more people in the industry knows about it, in working with industry leaders like Web3 Harbor. So this is how it works for a lot of other segments in industry as well. It's not perfect, but then if we really look at it objectively, I think there has a very strong private sector influence in a lot of policy making in Hong Kong in finance.
Thank you. Yes, I hadn't realized the FSDC was so pivotal in the construction of policy. Yeah, because it's largely a voluntary body, isn't it? Yeah. John, quick question. Do you think that all of this policy does enough to address what some would say was an inherent conflict between banks, which make a lot of money out of the payment transfer systems, SWIFT and so on, and stablecoins, which is a very different business model, which actually, if it becomes prevalent, may wipe out some of the bank's profits?
That's what efficiency and innovation does. That's why we have fintech, guys.
My question was about the inherent conflicts and whether they're being properly addressed.
I don't know that they're being properly addressed, but they should be acknowledged. I mean, I think that's literally why things get innovated, to make them more efficient, to make them cheaper, to deliver a better outcome for consumers, to create competition, not protect moats that have existed for no other reason than that was market construct. And so we're seeing that. So I don't know if it's being addressed, but it should be acknowledged. And you're seeing banks like very involved now and probably more involved in issuance. Standard Chartered is on one of the sandbox projects. You'll see other banks participate. And I think if they don't, it's to their potential peril on making a whole bunch of free money for not paying depositors. Like when Fed funds is 4.5%, and I get 5 basis points in my bank account, well, that money goes somewhere. And so as a consumer, that's offensive. And so as someone who has more choice, I would expect some of that value to be passed back to the consumer, just objectively. I'm more of a free markets type person, and for a functioning market, you need functioning competition. And so I think ushering regulation along this space is you'll get more competition, which is ultimately good for the user.
So, quick question on tokenization, and we don't have much time left. Could you tell me what you think is missing from the tokenization space in Hong Kong, John? And then, King, you were telling me you think it's all fine. And Helen, you can tell me what you've seen about tokenization in Hong Kong.
I think you need someone bold enough to go and do things and be knocked back. I think we've gotten a lot of requests from the regulators to make proposals, propose things. And I think there's hesitance from the industry to be a first mover.
Well, the client's effectively paying for that, you know, from a lawyer's point of view. So,
yeah, it's expensive. Yeah, doing something first is very expensive. Yeah. We just tokenized our stock, our equity. Not in an SPV, not in a swap. We went through the front door with SEC. There's a whole white paper. We just started trading last week. We don't have any venues to trade it on until we get the infrastructure built from the US. But we did the hard work. Extraordinarily expensive, very time consuming. Someone's got to do it.
Yeah,
thank you. And so we got to eat our own cooking.
Thank you. King, tokenization?
Well, we have to put things in perspective. Now, obviously, Hong Kong is just a city at the end of the day. We cannot do everything. So the way that I see things playing out is that we have to work on where Hong Kong is strong at as a starting point. And what that is that if you ask around, what's that one KPI that is quite important to Hong Kong? It's actually wealth management, more specifically cross-border wealth management. Now, if you look at the numbers, I mean, there are different studies, but most people refer to the BCG study. Now, Hong Kong is number 2, just behind Switzerland. And in 2 years' time, we will surpass Switzerland as number 1. We are managing over, what, $4.3 trillion of wealth in this one city. So that's why if this is where we're going to place our bets, then you can see that there will be a lot more innovation around all kinds of tokenized financial products being distributed to the private wealth owners. Okay?
Thank you. Helen, quick word on tokenization. What do you see?
I think tokenization is a very interesting question, right? And it's also one of the hottest topics this year. Technology, from technology's perspective, it is not difficult. It's not difficult to understand. It's not difficult to achieve. Infrastructure is a major hurdle. So we've seen a lot of submissions on tokenization, and I'll be very honest with you here, is we haven't seen anybody actually made the money from tokenization. Right? We've seen some very large companies doing tokenization. Banks behind them, there's the platform, there is the project, sponsored project. You look at the balance sheet, you look at P&L, it's looking pretty horrible. And we've seen this actually across Asia. We've seen this from Middle East. I'm really interested, and I would like to see someone actually, having a profitable business model and prove the concept, and we'll be more than happy to provide insurance for that.
Thank you. Thanks, everybody. And thank you to our wonderful panelists. Thanks. Have a great day.
Thank you.
Thank you. Thank you.